Breaking news on the housing market and new mortgage forbearance numbers. Diana Oleg joins us now with more. Hey, Diana.
Hey, Joe. Yeah, the number of loans in coronavirus mortgage bailouts is dropping, but a lot of borrowers are now extending their terms. As of July 7th, the volume of loans in active forbearance where borrowers are allowed to delay their monthly payments for at least 3 months, it fell by 435,000 week over week, according to Black Knight, and that's the largest one-week drop yet. Now, roughly 4.14 million loans were in forbearance, and that's 7.8% of all active mortgages, and that's the lowest amount since April 28th. By category, about 6% of all mortgages backed by Fannie and Freddie, and close to 12% of FHA VA loans were in the bailout, and just over 8% of loans in private label securities or bank portfolios. Now, the drop was driven in part by the fact that more than half of all active forbearance plans were granted at the start of April and set to expire at the end of June. The majority of those were actually extended. More than 26% of loans in forbearance were extensions. That, according to a count by the Mortgage Bankers Association for the week ending June 28th. That share has increased steadily for the past 3 weeks, and we expect it to continue to increase. Now, I want to turn to another sector of the housing market that is also seeing a lot of pain, and that is senior housing, very vulnerable to COVID-19. And we just got some new numbers out this morning that it saw a huge drop in occupancy in the second quarter of this year to just under 85%. That, according to the National Investment Center for Seniors Housing and Care. That nearly 3 percentage point decline was the largest quarterly drop since data reporting began 14 years ago, and it is the lowest occupancy for that sector on record. The only 2 markets with occupancy gains between May and June were Sacramento and Cleveland, and Atlanta and Denver experienced the largest occupancy losses. So that puts several senior housing REITs at risk, and they've already been on the decline. Names like Ventas, Healthpeak, and Welltower. Ventas, though, has an advantage as it owns both senior housing and medical housing, the latter doing much better. Seniors are now looking at different options, whether it's home sharing or multi-generational living with family. But this is going to be a big issue going forward as senior homes have been hot spots for the virus, and obviously seniors are most at risk. Joe?
Yeah. So, Diana, on foreclosures, do you expect to see those just ramp up and become a real problem at the end of all this? What do you think?
No, I actually don't. Not like we saw during the last recession. And that's because we have a record amount of equity in housing right now. Homeowners are in a far better position than they were 15 years ago. So if they weren't able to hold on to the house, if they felt that they weren't going to be able to pay that mortgage past that year limit on the forbearance plans, they could easily sell the house and just get out from under it. So I don't think we'll see foreclosures, but we could definitely see people who are forced to sell their homes into the market.
How about senior housing? A lot of construction lately. How does that play into the drop in demand?
Well, yeah, of course, builders were looking at the aging baby boom generation and expecting to see a lot more demand. So there's a lot of construction underway. Thankfully, a lot of it is not really scheduled to come online until next year. So hopefully demand will come back for them. But again, there's going to be pain in this sector as people decide what they want to do and how they want to live in that way. But that's a sector of the housing market that's going to be in trouble, I would think, at least through the end of this year and going into the next one, especially when we see that new supply come online.